we look at it in two areas: leading indicators, which is mainly the balance sheet, because the balance sheet will tell you where we are going to be at the end of the year. So if you look at our balance sheet, customer assets, so in terms of the loans, so that we've seen great momentum there, 8% growth, coming off a muted growth in Q1. So that is one of the highlights that we have. And who are we serving? We are serving SME, we are serving mortgages, we are serving asset finance. So quite good performance there. In terms of the other thing that has really stood out for me is in terms of impairments. If you look at the asset quality of our book, so currently our asset quality in terms of NPL ratio, we are at 10%, market at 14.1. So it's really a show of the level of quality of assets that we are ramping up. Even as we ramp up, the asset quality is improving over time. And the third one and the most final and the best has been the dividend play. So coming off interim dividend of 0.2 to 0.5, 150% growth. So giving back to our shareholders really. So those are some of the highlights that we have for half one. Diversification of that revenue mix has been one of our strategic priorities, and we are completing this strategic cycle in 2027. And the outcome of that is that we are looking to have a diversified business that can absorb shocks as and when they arise. So if you look at the composition of our NFI to total income, so we are at about 27%. So what is driving that growth? So we have new businesses within that NFI. One is a bank assurance business. So our bank assurance business is best in the market. We continue to see that momentum there and quite pleasing results at that. The other one is the asset AML, our AML business. So for alternative investments, if you want to invest in money market, if you want to invest offshore, so that is our one-stop shop for wealth kind of clients or anyone who wants to invest outside the typical, financial instruments. The third one and the newest kid on the block is our custody business. So our custody business, barely 2 years, around about 3 years old now. In terms of that trajectory, it's more than 100% year on year. Yes, off a small base, but we have seen that coming up. So from an NFI perspective, I can say that is one of the strategic levers that has worked through the strategic cycle, and we continue to track it in the future. In terms of how we ascertain the level of dividends that we have, it's mainly in terms of where we're looking to grow, where are our ratios, isn't it? How do they look like from a market perspective? Now, if you look at our capital and liquidity ratios, so we are total capital about 17 and 19 for both Tier 1 and Tier 2 capital ratios. So well above the regulatory thresholds. So to that extent, we feel that we have buffer, in terms of what growth do we have and can we accommodate that growth and still be within our threshold. We also look at it in terms of what is our return on equity. So on average, our return on equity has been in the ranges of 26, 25. Q1 market was at 18. So you see that bandwidth. Yeah, so we've also looked at it to say, okay, what more can we do from that perspective? Then from there, we stress test the balance sheet and say, in the event the macros shift, what would that mean from a capital supply perspective? So that is a policy in terms of how we look at it and look at the level of dividends that we can distribute at any given time. So after we did that, we saw we can accommodate 0.5. So our payout ratio is, we have been at 50, but we are looking to take it to 55. So we anticipate for that to be in the future. terms of forward looking and where we see ourselves, the first thing is in terms of customer assets. So we've seen that momentum, 8% in Q1. We anticipate that to go into double digit into half two. So we are seeing huge pipeline that we can convert, and areas, opportunities in the market, or opportunities in the economy that there is a bit of demand in terms from a loan perspective. So we anticipate that is going to be at 10%. The market currently, MPC released that that growth is at 10% as of July. So we anticipate we are going to be above that by end of the year. In terms of our cost to income ratio, we anticipate we are going to be in the 40s over time. And we are really proud of that in terms of efficiency, and you know how much it costs us to generate 1 shilling of revenue. So also quite some good outlook there, mid-40s. In terms of our loan quality, we still anticipate it to be below industry standards. And it's as a result of so many initiatives that we do over time. We try and look at how do we optimize, coming from a contract perspective, how do you make your costs variable over time. So those are some of the benefits of what we are seeing in the numbers today. So how do you budget? Where do you see yourselves in the next 2 months, in the next 1 year, in the next 5 years from a budget perspective? So not budgeting does not give you that view. If you don't budget, you don't know. So I think budgeting is one of those. If you have some investments, be patient and you will be able to recoup. And the third one would be visit our AML shop, and you know, you may just get the advice that you need from a financial perspective.